Hey everyone, welcome back to the channel. In this video, we're going to be talking about if the stock market bubble is finally popping. We've seen a big sell-off in the market over the past couple of weeks. So in this video, we're going to take a look at the markets, see exactly which stocks and which sectors are dragging the stock market down the most. And later on in this video, I'm going to be showing you one key piece of evidence which may suggest that this stock market crash can go on for much longer. So today was another red day for the markets. The Nasdaq actually outperformed. Both the Dow and the S&P were down over 1%, but the Nasdaq was only down 0.1%. So this is a reversal of what we've been seeing since during this market sell-off. It's been the tech names that have been dragging down the rest of the market. Today we've actually seen that change a little bit. And so what's super interesting to look at is how the sector trends have changed for this year. So if we look at the year-to-date performance since the beginning of this year, there's really been two clear sectors that have been outperforming. It's been the tech stocks and then the consumer cyclical. But if you shrink this down and we start looking at just the last few months, then the last few weeks, we see a different picture of what's going on in the markets. Where if you look at the 1 month performance, you now see really the opposite going on, where the leading industries are the industrials, consumer defensive, and then basic materials. Basic materials is a sector that's actually been doing very well over the past few weeks, while the rest of the stock market has been falling. This is also a reason why my Contura energy shares have been up so much in the past couple of weeks, I'm sure, because a lot of money is flowing into the basic materials sector right now. And so I think what we're seeing is sort of the same sort of thing. Investors are getting concerned about the high valuations of tech stocks since they've been going up so much this year. And so they're now starting to rotate this money back into other sectors of the economy that they might think are more undervalued. For the 1 month performance, technology is down at the bottom of this performance. And even though the markets as a whole are going down, there are some sectors that are doing better than others. So I think that just shows there's always opportunity in the markets. Even if all the tech stocks, the well-known names, are crashing, there's always other stocks out there in different industries that there may be opportunity in. So here's a map of the S&P 500, and this can give us another picture of how the stock market as a whole is performing, and then broken up by different sectors. So the big thing that jumps out is all these huge tech stocks have been down over the past month. You have Microsoft down 5%, Apple, Google, Facebook, and Amazon all down big. And even though these are the largest companies in the S&P 500, and it does look scary when they're all going down, if you take a look at the rest of the stock market, it actually doesn't look as bad. Where you have entire sectors going up, like the semiconductor sector, most of the stocks were in the green there. You also have banks and insurance looking pretty good. And then you can even go over to the industrials, where you have industries like railroads and even machinery stocks like Caterpillar, and even restaurants like McDonald's and Starbucks. These are the type of stocks that have been rallying while the tech stocks have sold off. And so now the question is this over? Is this just a rotation from the tech stocks into all the other industries that might be undervalued, or is this just the start of a larger fall in the stock market? So here we are on the S&P 500 sentiment report, and as I've said in past videos, this is one of my top indicators to look at for the direction of the stock market. When there's too much greed in the markets and everyone is buying up the stock market and getting greedy, or if there's fear everywhere and people are fearful and stocks are trading at undervalued prices. So I've showed you this chart in recent videos, and there's recently been a big change compared to what we've seen over the past few months, where again, this line represents the net long traders versus the net short traders. And so what ends up happening if you watch this chart is that the stock market tends to do the opposite of what the majority of people are doing. Where if you have a ton of people overwhelmingly short the market's going to tend to keep going up. And if a ton of people are long the markets, that means the market is usually set for a pullback. And so during this whole run up from April all the way to just around the end of August, we saw a huge amount of short selling in the market, where we had the vast majority of traders being short compared to traders being long. And so like I said in my videos talking about this, I said as long as there's all of this pessimism in the markets and so many people are short, the odds are the stock market's going to keep going up, because all of these people that are already short have already taken their positions in the market. And so because of that, all that selling is already done. And so what tends to be left are only the people on the other side, which are the buyers, that will keep driving stocks up. But now we've seen the biggest change in the sentiment report since the huge stock market crash back in March, where we're now at the point where almost half of the traders are long. You can see right here at just about 45%, where for most of this rally, we were down at only around 20 to 25% long exposure. And so what's been happening is we've had this dip in the stock market, and now what we're starting to see is a lot of traders go long, thinking that this is a sort of buy the dip scenario. And so right now there's a very close to equal number of people that are short the stock market and long the stock market. And so this is the thing I said to watch out for. I said when everyone starts to get overwhelmingly long on the stock market, market, that is usually one of the indicators that there could be a further drop in the stock market. And this chart doesn't go back to it, but if you look at what happened back at the end of February, at the beginning of the huge sell-off earlier this year, the same exact thing happened where we had a small drop to start, then a bunch of long traders rushed into the market. We had stocks go up a little bit as a result of that, but then after that, the sell-off continued and went down a lot farther. And so, of course, I can't predict what's going to happen with this. I'm not saying that this will play out the same way, but so far, at least from a sentiment perspective, it is looking the same, where we have a decent sized pullback and then a ton of traders come rushing in to go long the stock market. And the analysis of this chart is that it's usually best to take a contrarian view to the crowd. And so even though this was easy to do when 75% of traders were short the market, we're now at a point where it's pretty much 50-50 and it's really unclear which way it's going to go. So this is something definitely to keep an eye on and to keep watching. I'll put a link to this website down in the description, so definitely check it out and check it every once in a while just to get a sense of what the sentiment is like in the stock market. I usually check out once a week or so just to see what's going on with the mentality of other people in the stock market. And here is another chart we're going to look at from Macro Charts on Twitter, showing the insider buys and sells of corporations in the stock market. And as you can see from this chart, insiders are typically pretty good at selling before there's some sort of a pullback in the market. If you take a look at all these tops, usually not too long after there's some sort of pullback in stocks. But the thing to note about this time is that they timed the top pretty much perfectly, where they sold right at the top before we've had this pullback of 5 to 10%. And the interesting thing to notice on this indicator is that when you get an extreme reading like this, you usually see this revert all the way back down to the bottom, where there's more insider buying than selling. And so if you look at all these tops, usually you don't see a top, then the indicator come down a little bit, and then insiders keep selling. You usually see a peak in this indicator where insider selling is at a high, and then you see that come all the way back down to where the buying starts. And so the point of this is that we're not really anywhere near that yet. We're not even halfway to the bottom of this indicator. So this is also something to keep an eye on, where if you see insiders keep selling stocks, that could be a potential factor that keeps driving stock prices lower. And even things like corporations buying their own stock makes up for a huge amount of volume in the stock. And so if we do see this maximum insider selling continue, this could be another sign that stocks still have farther to fall. So we've seen this 10% correction in the stock market, and where are stocks going now? And I don't really have a great answer for that question. To me, it's really unclear what this is. If this is some sort of pullback and we will keep going on to make a new all-time high, or if we just saw the top of this huge run-up and now we are coming back down. Obviously, anything can happen, but probably the best thing to do right now is to put yourself in a position to benefit from either situation happening, where you could either have the stock market go on to all new time highs, or we could see the stock market continue to go down, potentially a pretty large amount. And like I've said in a lot of my other videos, I do this mainly in a few ways. One, I only own stocks that I'm planning on holding for the long run, so I don't care if the stock price falls, and if they do fall a large amount, I'll use that as an opportunity to actually buy more shares instead of becoming a panic seller like a lot of people do in those situations. And another thing I'm doing right now is I'm not all in on stock. I still have a fair amount of my portfolio in cash that I've been waiting to use when stocks that I like get down to a price that I think is appropriate, that I think makes them undervalued for the amount of money they're making. So I'm not trying to time the market with this. I cannot time the market any better than any random person can. But when the market's at an all-time high, it's hard for me to find stocks that look attractively valued. And so there's nothing wrong with just waiting and holding some cash, waiting for an inevitable pullback. It's going to happen at some point. And usually when those pullbacks happen, like we're seeing right now, some buying opportunities do come out of it. So right now I have been keeping my eye on a couple stocks that I am considering buying if we see the stock market continue to go down. Let me know in the comments if you want to see a video on those stocks, basically what my watch list is, what stocks I'm watching to see if they get to an attractive buy price for me. So if I get some people say they want that, I'll definitely put that video out. And so that's it for now. I'll keep an eye out on what the stock market's doing, and we'll definitely come out with an update if anything else interesting happen. So if you found something of value out of this video, hit the like button, as it helps out my channel a ton. If this is your first time watching one of my videos, subscribe to the channel and hit the bell icon so you get notified whenever I upload a new video. So that's it for now, and I'll see you on the next video.